You guys ever been in that situation where you're like at Silverwood and your phone's about to die and you're like, oh my goodness, what am I going to do? I can't go without it, because you've been death scrolling while your kids have been on rides the whole time? Am I the only one that did that? So I want to give you guys some news. The Kiplinger letter was a little light today, but I've got some other things I want to share with you. The U.S. economy right on cue. The labor market appears to have cooled off. Strong job gains this spring were cause for optimism, but June's tepid 57,000 jobs created plus downward revisions to April and May's tally show that hiring isn't ramping up. As we noted last month, the job gains have been concentrated in a few sectors and so may not be durable. Now the labor market appears to be settling into a pattern of decent but not spectacular job growth as employers remain wary about expanding. Also concerning, the workforce participation rate dropped significantly in June, back to levels last seen during the pandemic as people stopped seeking work. What is the advantage of a labor market that is in decline? What's the cause and effect? When the jobs report is low, people aren't hiring, what does it mean? What are the feds most likely to do when people aren't working? They're going to drop interest rates, okay? So when I read to you the jobs report was terrible last month, we go, woohoo! Because that's how we get the feds to drop the rate. So it's not a bad thing. When we see companies hiring less, the feds will go, oh, well, that's going to cool inflation, because less people working means less people spending money. Less people spending money means less supply and demand. Less supply and demand means we need to drop rates to get companies borrowing again and spending again and hiring people again, so we can drop rates, which then affects housing, which then everything is affected, okay? So the jobs rate is a big indicator as to what's going on in the markets nationally. Only 57,000 jobs in the month of June created, and they're expecting less in July. So be aware of that. Tech and telecom, an already hot commodity poised to get even hotter. Wireless spectrum. Expect telecom and space giants to spend huge sums on cellular airwaves. A major auction in 2021 raised $80 billion, and SpaceX figures to be a big player. Have you guys heard rumbling that Musk is planning to buy out one of the big carriers, whether it be T-Mobile or Sprint or AT&T or whoever the big carriers are? He is playing with the idea of tendering an offer to buy them out. This would be a multi-$100 billion plus deal. So it's going to be interesting to see what he does there. All right. Revenue per employee. I mentioned this remains significantly stronger than last year, showing we're becoming a leaner, more productive organization. The opportunity now is execution. Our pipeline is strong, but we need to convert interest into enrollments, loans, and deployed capital. Every follow-up matters, every conversation matters, every client served well creates momentum for the entire company. And we had tremendous momentum last week, you guys. We want to keep that up. Is anybody familiar? In fact, I want you to write these two terms down. I specifically put them in my notes because I want you to be aware of it. Predictive markets and predictive investing. I just became aware of this last week. A friend of mine who runs a mastermind group in Florida, the family mastermind, said, Lee, are you familiar with predictive markets or predictive indexes? And I said, no, I am not. And he took me to a website, an app called Kalshi, Kalshi. Jeff's shaking his head violently back there. Are you familiar with Kalshi?
The World Cup and Kalshi, they go together perfectly.
Okay, so if you guys has anybody on Kalshi or been to Kalshi? All right, who has no idea what Kalshi is, and this is all Greek to you? Okay, good. I'm in good company. Kalshi is a gambling website where you can gamble and bet on random things.
The
lawyers
of Kalshi would like to clarify that it is not gambling.
The what?
Sorry, a joke. The lawyers of Kalshi.
The lawyers of Kalshi would like to verify that it is not gambling, it's gaming.
It's a market. That's why.
It's a predictive market.
It's a predictive market. I did hear though, Dan, it's under regulation by the SEC, so it's like legit. It's the OCC. It's legit. It's like a real thing. So right now you can go on and bet $50 that on July 29th, which is the next meeting of the Fed, you all need to be aware of that date. July 29th is the next Fed chair meeting. There is a 2% chance that the Feds will drop rates. So you could bet $50, and if the Feds actually drop rates, you would make like 1,000 to 1 return. So you'd make $5,000 on a $50 bet. So these are the kinds of things you can bet on. And if you go to Kalshi, don't do it on the clock because you will get stuck in there. It's crazy, the stupid things that people are gambling on. You actually can gamble on what stupid thing Trump is going to say today. And they give you options. Trump is going to offend this person or this person, and then you can buy the odds, right? So I made $2.50 last week. Very excited about it. Thank you, thank you, thank you, thank you. I bet that Rory McIlroy would win the US Open, but I did a stop call. So I put in a bet at $10, and then I said if my odds go from 30% to 70%, I want you to sell at $12.50. So you can set a strike price. So if I sell when the odds improve, I can make money even if he doesn't win. You can now sell your position. So I can sell my 70% win position, which is what I did. So I made $12.50 instead of $14.50 because I sold at a stop gap. So this is like this big deal. Now, why am I telling you this, Lee? Why is this useful information? Because they're using predictive indexes now to determine if interest rates are going to go up or down, to determine if gas prices are going to go up and down. They believe that the predictive markets will more accurately predict who the next president of the United States is more than any poll that has ever existed. Because people are putting real money behind their opinion. And if I'm putting in $50 to say that J.D. Vance is going to be the next president, who do you suppose I'm going to vote for? Probably J.D. Vance, right? Marco Rubio, another big contender, at least for the GOP. And now I'm hearing that Gavin Newsom. I'm told he will be the front runner for the Democratic nomination for the next presidential election. But these predictive markets are determining who's going to win. Who's going to win in the local Senate races. It's crazy. So Kalshi is one of these, and the other one is a site called Polymarket. I've not looked at Polymarket, so I don't know anything about it. But you guys are going to be hearing a lot about this thing. But also be aware, as I was on the phone with Matt, I said, so maybe this is the reason why people have stopped starting companies and being entrepreneurial, because they're buried in Kalshi betting on who's going to win the next UFC fight. And what do we call it, Dan? Where'd Dan go? Do we say betting? What do we say?
I mean, you're totally right. In practical terms, that's what it is.
In practical terms, it's betting, but we don't call it that. It's
they prefer just the terms you've been using, predictive market.
okay. So I'm predicting that such and such is going to happen. So Kalshi currently assigns approximately the July Fed decision implied probability. 86% believe the Feds will hold rates steady. 13% believe that the rates will rise 25 bips or 25 basis points, and 2% chance that they will cut rates. So if you buy the 2% chance and they cut rates, or the jobs markets continue to trend down and they do cut rates, you could make a significant amount of profit on this. I was having this conversation with Cherie last week, and she did a quick chat search and determined that in the last 60 days, over $500 million has been lost on predictive market gambling. Gaming, predicting, whatever it is, Dan. There you go. Polymarket is giving a similar signal, pricing roughly a 91% probability of no change to rates. So for planning purposes, borrowers and lenders should assume that short-term rates remain near present levels through the immediate future. So here are the real estate trends to be aware of. Properties that are overpriced or need work are sitting longer, while appropriately priced properties continue to move. Seller financing and creative structures are increasingly valuable. Assumable loans subject to transactions, seller carrybacks, and rate buydowns remain important tools. So the opportunity for Kogo Capital's brokers, not Kogo Capital, opportunities for Kogo Capital's brokers are DSCR loans, bridge lending, fix and flip financing, private money brokering, refinancing stabilized rental properties, and helping borrowers who do not qualify through conventional banks. So all of the stuff that we would normally market to the retail sector, what we'll do instead is we'll push it out to our brokers, train our brokers what they should be marketing for. They push it out to the retail markets. They bring it in because we are a wholesale lender. There you go. Love it. Okay. Some small business and consumer trends. Now, this is probably the most important part of what I'm going to share with you today. Consumer spending has remained more resilient than many analysts expected, but households are becoming increasingly selective. Businesses should anticipate greater resistance to discretionary purchases, longer sales cycles, more financing requests, greater demand for payment plans, and increased attention to measurable return on investment. This benefits companies that can clearly explain how their product helps customers make money, save money, and obtain capital. For the Lee Arnold System, Coco Capital, and the new business funding vertical, marketing should emphasize tangible economic outcomes rather than general education. So the market is becoming more discerning, it's becoming more cautious, and we now as an organization have a greater lift of helping them understand the benefits of investing in us and with us and through us and getting involved in our educational programs. And so more testimonials, more success stories, more look at what somebody else in your shoes has done. More of that is what the market is demanding. Should we be looking out for? Okay, the most important developments over the coming weeks are, first of all, the July 29th Federal Reserve decision. What they do there is going to speak a lot to markets. I'm of the opinion that they're going to hold steady, but the odds in the predictor market are not good, so I will not be putting any money on that bet. Airball. Thank you, Jacqueline. That's for that term. That was a total airball. Nobody got it. All right. Number 2, oil prices in the Strait of Hormuz, shipping activity. Number 3, core inflation and shelter costs. Number 4, employment and wage growth reports. Number 5, mortgage rate movement. Number 6, consumer credit delinquencies are trending up. Number 7, bank lending standards are tightening, which means more businesses are going to private capital and private markets, which is why we're going heavily into business financing. And number 8 is the AI sector earnings and capital spending. Okay, the economy. So here's my conclusion. The economy is not collapsing, but it is operating under significant pressure. The best strategy is not to wait for dramatically lower rates. It is to operate successfully in the environment we have. So number 1, help clients access capital. Number 2, offer creative financing solutions. Number 3, focus on cash flowing investments. Number 4, underwrite conservatively. Number 5, follow up relentlessly. And number 6, clearly communicate measurable value.
If you want to learn more, just click the link below.